Alrighty, Doctor from North America. Good morning, good afternoon, and good evening. As you can see, again, interest rates are moving down. It just, I must sound like a broken record, where I repeat the same thing. But what it is just repeating what we see, and each day it tells us how wrong the Federal Reserve was. It's just unfortunate what it is, but it is, and if the Federal Reserve is doing something right, I'd be the first to be telling you that they're doing something right. And at this point in time, there's a real concern about inflation because of the half of percent cut. Like I said, if they had done a quarter, they would have thought, oh, okay, we'll put up with it, we'll adjust things. But when you cut things a half of a percentage point, what it does is it just puts more cash into the system. And what generates inflation is more cash chasing fewer items. And that's what the problem is. And there's no getting away from it. And as we said for the last 10 months, we didn't expect to see an interest rate cut. And then they started getting concerned about the employment numbers, and they knocked out 8 million people employed. And it was like, oh my goodness, maybe they really do need to cut, and what it comes down to is that they just play games with the numbers. That's all they do, the Democrats won an interest rate cut before the election. They got an interest rate cut before the election, and now the markets keep on telling you day in and day out that it was the wrong thing to do. I mean, interest rates now are 3/4 a point in the trading market higher than from the cut. So in other words, they cut a half officially, and now they are 3/4% higher. So it's like, wait a minute, mortgages went up, mortgages were supposed to go down. Being able to borrow money was supposed to be easier, not worse. Instead it's turned into a fiasco there. So that is the 30-year bond right there at almost at its lows of yesterday again. And here we go to the dollar index, and I'm sure it's rebouncing around. You could see that it was in a weekly buy and a daily sell yesterday, and there it is right there. And you see it's turned right back up again, and we had a green and a red yesterday, so we couldn't get into the sell. And sure enough, right back up again. And this is what, 20 days? Where are we at now on this thing? Bing, 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 bing. 21 days now in a buy. 21 days. Now we're in October 29th, and I think they cut the rates somewhere around the middle of September. So pretty much almost within the week that they cut the rates, the bond traders, global bond traders said, we're not putting up with that. We're definitely not putting up with that. So that is the story. That is the story. So from there, that, and then we'll go like that, and go from there to there. So where do we go? See. Let's jump over to the euro. Where's the euro at in this thing? Right there. And there's the euro. Euro went into a buy a couple days ago, thinking, well, maybe they're done with the bonds. Maybe they're not going to do what they're doing. But you can see here today we are starting to threaten another daily sell, and it's in the weekly sell. So it's not like we actually thought of this as anything more. But I didn't really call it a dead cat bounce. I said I was afraid that it could be one. I was really hoping that the bond vigilantes were done, but one thing is for sure: they have deep concerns about increased inflation, and they're going to put a haircut to it. That's what they call it. Traders call it a haircut. They say, when traders are concerned about a particular product and they're uncertain, what they do is liquidity shrinks, and they put a premium to it. In other words, they make the volatility wider than the price wider. As we take a sip of our tea there. So that's where we stand. Let's take a look at cable. And there's cable. Cable climbed into the daily buy yesterday. You got a green and a red today. It's still fighting to try to stay in there, but you can see it's minus 0.00016. But it's also in the same situation as the euro. It's in a weekly sell now for a fifth week. So as much as we would love to see the dollar go down, unfortunately, the politicians and the Federal Reserve have forced it to go up. And that's what they're doing. Hey, Robin. Ask Doc. I like that idea. Ask me something. Let's get involved in something new today. Doesn't anybody have anything out there they would like to look into that we could chew it apart, take a look at it, see if we can get some new perspective of something that might give us a whole new idea. You never know. You never know when you look at something if it's going to give you something, something really intriguing or something not. We've talked about this for years here on the webinar, is that there's never a wrong question. There's only a long answer or a short answer to it. That's all it comes down to at this point. But there's never a wrong question, because you never know when you may actually look at something, and we'll look at it all together and we'll go like, wow, look at that. Didn't notice that was doing that. And that's really the way it works a lot of times when you're doing research. You look and you go into areas that you don't really think about, and then someone points out something and you think, well, maybe I'll take a look at that. What is this? Got an interesting email there? Okay. All right. So from there, what else can we say about any of this at this point? I guess if no one has anything else to look at, we'll jump over to the Swiss. Let's see what the Swiss is doing this morning. Swissy. Darn. So he pushed it into the sell yesterday. We were in a weekly buy, so we weren't exactly planning on being short, but I was hoping that it was going to top out in here. So I guess it's going to go after this, what is that? That is 87. Is that 87? 87.55 basically. We're at 86.94 at the moment. And you can see it's trying to pop back into the daily buy. And we're in the weekly buy now for, again, like the euro and the British pound. It's in a weekly buy now for 5 weeks. And so the euro and the British pound are in weekly sells, which means they're losing against the dollar. And the Swiss dollar pairs trade means that when it's in a weekly buy, it's also losing against the dollar. Remember, we look at euro dollar pairs trade and we look at British pound dollar pairs trade. But here we're looking at dollar Swiss. See, it's the reverse. So it tells us when it's the dollar and it's gaining, it means that the dollar is gaining against that currency, vice versa. Just like when it says euro dollar, like right here, euro dollar, not dollar euro, it's the euro is losing against the dollar, or the other, whatever pairs trade it is. And so that's what was going on with the Swiss. It's perking its head up, starting to play around towards the high end of its range there. What else can we say about that? Excuse me. Let me have another sip of water at least. I'm going to skip my tea because it's halfway low. So we'll go to a glass of water. Yeah, so, we figured that, this is not the worst thing in the world. I mean, the fact that the product bounces between the low to mid 80s to the high to mid 80s is not, it's not Turkey. Let's put it that way. It's no chaos there. All right, and then from there you can see the yen. The yen stayed in that daily buy, and it's starting to flirt with the top end of that range right there, trapped in that box. And it's been in a daily buy now. Where is it on the spreadsheet? Line $1.39, and we are same situation. They're all marching the same way. It's losing against the dollar for the last 4 weeks. This is the fifth week in the weekly. And it's 18 days, and now we're going on to the 19th day. And it's like, woof, woof, woof. It just doesn't stop. And I guess I've really emphasized how powerful the bond market is and what's been going on in the bond market. So that's I guess you could say that's the disappointing situation there, is that we have such an odd conflict. And there's real serious conversation going on about it here in the States. We hear in a lot of different areas in the financial community saying we need to change the way the Federal Reserve works because it's not doing a good job. And here we have $37 trillion in debt, and they're responsible for a lot of it because Mr. Powell refuses to tell the Congress. See, we used to have different all the Fed chairs up until Mrs. Yellen and Mr. Powell. They would tell the Congress, you're overspending. You should try to rein in your budget a little bit. Just spend what you receive each year is record amount of money coming in. It's not like, record taxation has not been record. In other words, we can make more. Mr. Trump has lowered interest rates. I'm sorry, he lowered tax rates, and we receive more money. Ronald Reagan lowered tax rates, and we received more money. When you raise taxes, you receive less money. But for some reason, the left in our country doesn't understand that, and so it's this constant fight all the time. They want to raise rates so they have more to spend. We keep on telling them lower rates, and you'll have more to spend. So they're spending all the money that they haven't changed Mr. Trump's policy of taxation, which is kind of funny because we keep on expecting to see them do that. But they're pretty happy spending that money knowing that it would stop coming in and really turn the country upside down. So you see here, the new government, I thought when we saw this red and green yesterday, I thought, well, maybe they're going to, we were just underneath. I thought maybe this will start to curve down and maybe they're going to, feel a little bit more positive about their economy. So, but right now it's making me a little concerned with this push more and more. And it's the dollar being stronger because interest rates keep on rising here in the States, even with the Federal Reserve lowering the official rate. All right, now from there we jump over to the great experiment, I call it. That's the Turkish lira, Euro-Turkish lira pairs trade. And due to the fact that the Turkish lira is weak, it seems to be benefiting the Turkish lira. You see there, it's we are now going on a sixth week. We haven't seen a sixth week in 3 years. A sixth week in a weekly sell. That's pretty good as far as I'm concerned, because the lower the better for the population of Turkey. It helps them. It doesn't hurt them, that's for sure. And so that's where we stand with that. And you can see here, we're at the 36.98, basically 37. We've come down from that mad wild pop up to 40 and change. And, we've been hovering in the 37s and 38s and mid 39s for about 3 months. And you can see that there. These were the all-time highs. And with some luck, maybe it'll fall back into some of these things here and stay here for a while. But unfortunately, I really believe it's more of a weak euro than it is a strong Turkish lira. But we'll take it because we're cheering on the population of Turkey to have a better life and move away from the big experiment of former Prime Minister Erdogan, who is now President Erdogan for life. So, all right, and then from there we'll go down to South Africa. And you can see here, we drew that line in here, right there, couple days ago. And let's see if we move it up a little bit, but unfortunately it's more of a sideways action than it is a downwardly action, which normally would put pressure on the metals complex. So let's take a look at gold. Take a look at silver. Silver is back in the daily buy. Copper's back into the daily buy. Gold stayed in the daily buy. We're at, basically it looks like to me, we're at all-time highs again. Is that all-time highs? I think it is. So gold is hanging out at the all-time highs again. Yep, that's all-time highs right there in the dollar. So you can see there, we stretch it out just to get a flavor of it. It's been in a weekly buy for a while now. How many weeks is that? That's line, what is that? That is line, was it 12? Line 11. 17 weeks in a weekly buy, 3 days in a daily buy. Today's the 4th day. And we can say this for a fact. Let's fix that. I think that was a 1. Let's do that. 1 tab, get rid of that. And 1 tab, get rid of that. There it is. And that's where they stand now. It's they're in daily buys. Let's show you silver. Silverado. Right there. There's Silverado. Went into the buy yesterday. Saw that like later last night. And so, matter of fact, I think I'll put that up on the other screen and fix that too there. Yeah, so there's the silver. Silver is also line 13. We're looking at 10 full weeks. This is the 11th week in a weekly buy. And, we flirted with that $35 area, which was really good. Put some push into it. We're always hoping that they make the silver catch up to the gold. There's a lot of buyers of that product. And they're always like wondering, when are they going to get all-time highs again? And so far, they barely can get out of their own way, really. So there's silver in a daily buy and a weekly buy, and it's very firm, no problem there. And then, dink, 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 and dink, 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 there. All right, let's save that. File save. There we are. So the silver is lifting up. Maybe it'll go after the 35 and even more. We'll see. And from there, we go and look at copper. And there's the copper. Copper pushed into the buy yesterday. Had a nice spike up. I know Shanghai was down today. And we were hoping to see, well, in this case here, Shanghai is kind of trapped. The world is hoping. The world markets are praying. They are lighting incense to the bank, People's Bank of China, so that they'll help and add another 20 trillion or 25 trillion to the stimulus. Right now, they've only just wet our whistle. They've basically just said, here's 1 trillion yuan. We're going to, which is about $156 billion. We're going to try to, perk up our economy, stimulate it, do our own form of QE. And so far, not exactly doing the best of that situation. They need to put in literally 2 or 3 trillion a week of yuan, not 1 trillion of yuan 3 weeks ago or 4 weeks ago now. And we just wait and see if the China that everybody thinks it is going to be the China that we believe it could be. I don't believe it can be, but others do. And we sit there and we keep on telling everybody that China is a paper tiger and it's not the place to be. And other people say, yes, but they got 1.4 billion people and they practice slavery, so you can really get some good production out of it. And we keep on saying, wait a minute, I thought we're against slavery. We're confused on that one. I thought we're against slavery. But somehow or another, the left loves that slavery stuff. All right, and then from there, we go down to the platinum. There's the platinum making another high. Before you know it, we may see $1,100. Whoop-de-doo. And you can see it's been in a buy for a bunch of days here. And we're, what's that, 3, 5, 7. This is the 8th week in a weekly buy on the platinum. We keep on thinking platinum is going to tell us the real story. It's the canary in the old, coal mine, the whole bit. So we're watching. We're curious, constantly wondering. Is this signs of even more? I want to believe that when Trump gets elected, that the price of gold is going to go down, not up. So I kind of think of this as a blow-off top, but I'm not really convinced that we're going to see platinum itself go down much. I think we're going to see more of the top metals, go down. All right. And then from there, let's see, let's go to, I guess what we do is we slide over to the energy sector. Now, we're getting a little pop right there. You can see that on crude oil. And right now, our beta is still down. Our programmer just came back from Viva Las Vegas. Came back last night, so maybe he can get this thing straightened out soon. Because we're looking forward to having our beta back. Let's see. So there's the oil. You can see that right there. I'm heading to see where Brent is at the moment. Let's see. Let's go like this. And go like that. Minimize that. Connect that with that. Let's put that up there. Let's see. Where is Brent? And that is ZB, is it? BZ? There's BZ. Brent up 91 cents at 71.91. We've got crude oil basically playing the same game up. Is it up about the same? CL is up 99 cents, 98 cents. So they're basically cruising along the same way. They're both trying to lift. They're both flirting with the daily buy, and are both in weekly sells. I believe the Brent is 3 weeks in a weekly sell, and the West Texas right here is only going on a second week. On our beta platform, they're both been in a weekly sell for 3 weeks. And then from there we go over to heating oil right there. And there's the heating oil. And you can see here that's lifted up, but is lower than from the high of this morning, but still higher than yesterday. But it's still in the sell right there. And it is in 3 weeks of a sell also. Now that's the fuel that's derived from crude oil. It heats up the engines on the planes, and it heats up the truck engines to deliver goods and services. It's a major player in the energy sector. All right, so what else can we say about that? I guess we could say that the energies are doing their best to go down, which is good for a winter time of the year. Take a look at natural gas. Natural gas doing the same thing. It's actually lower. That's actually lower. And it's been in a weekly sell now for 4 weeks. And then we have, I think it's, we were looking at, let me see if we can find it here. Let's close that. And let's find, where is it at? Right there, maybe? Oh, I noticed. I have to open up ExxonMobil. Let's see where the ExxonMobil is. That's just like the energy company in Spain. We'll take a look at that too at the same time. But let's see the energy company in Spain to start off with. EM. Let's see. Let me just look at it on the platform. I got all my symbols. I just don't have the platform updating right now. Something about the data feed has been disconnected. And he's trying to get the data feed reconnected again. Let's see. EM. I think it's ENG. There it is. ENG. ENG. Dot. I think it's SA. Let me just double check it there. ENG MC, that's what it is. MC. MC. There it is. And it was, I think it was up yesterday, right? Was it up yesterday? Let's see. No, it was down. And it's still down. It's pressing down again today. So they've pushed it, it follows the price of the energy, which tells us that obviously the energy is, lower in price right now. And maybe that will, and you can see natural gas being down. So hopefully Europe is feeling some of that pleasure of having it down. Let's see, let's put it up on here. Here we go, right there. And this is ExxonMobil. This is the biggie in the United States, doing that same thing, pressing down. Closed in the weekly sell last week. I think the energy company in Spain, I think, is 5 weeks in a weekly sell at this point. 5 weeks. It was flirting with a weekly buy, and then it rolled over. So, it was. I think this is the 5th week now in the platform for it. Let's see what else is there. There's ExxonMobil right there. They took it down hard yesterday. Look at that. But they tried to bring it back by the end of the day. Let's widen that out. And you see, the Spanish company didn't do that. It wasn't successful doing that. It ended up closing down. And you can see it's, I guess if we widen this, you see the algorithm itself and then bring it down. Bing, 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 bing. There we are. You see it's closed into the buy. See, this is interesting. This is in a weekly buy, even with the slide going on. Now, the fastest dropped into the sell 2 weeks ago, but the slow is still hesitant. And I guess they really don't want to sell it as much as, it's in a weekly buy, daily sell. So it's kind of a neutral position when it comes to this product. There was your sell there. You can't take the sell. It lifts up, goes into the sell here. You can't be long in here, and you can't be short. It's a neutral at this point. You sell calls against it, buy some puts, collect the dividend, enjoy the day. It's like a synthetic bond. That's pretty much what it comes down to. You can see here it climbed into the buy there, and you got whacked, and it's battled its way back up from there, but still it's a loss. It's a loser right there. So the winner here gives up a little profit right there, and I guess this was a winner there because it got up to here. Went from a close of what's that, 23.60 up to 24.46. So it was up about 80 cents before it rolled over, and then it pushes itself into the sell here. You can't be short it because you're in a weekly buy. So it's been kind of that odd situation here. Same thing over here on the vice versa side of it. When it was in a weekly sell, you could take the shorts and have winners, but you couldn't take the longs. Just know not to be short. That's all. Sometimes 3 positions: be long, be short, or be neutral. That's pretty much the answer to it all. No, I think we have economic news coming out at the moment, right now. Let's see. Now, where's it at? I think the JOLTS comes out. The employment number, JOLTS. Let's see if they're reporting the JOLTS. Yeah, I think JOLTS comes out at now, and I forget what comes out at another hour from now. Don't see it. Huh. So we're seeing the stock market back off a little bit more. So obviously, whatever came out, they don't seem to be. Let's see, Bezos on. They're talking about everything else but the data. But I saw two datas coming out, and one just came out just now. So we've seen stock market get pinched a little bit more on the downside. All right, now from there, where do we go from there? We go to, let's see. Right there. Wow, 10-year Treasury is up 4 bips. Yeah, see, and even the 2-year Treasury bill is up almost 4 bips. And Bitcoin is up $1,200 today at 71,000, heading for the all-timer again. So, all right, what else do we got going on here when it comes to, that's the energies. I guess we're done the energies. So let's just take a look at what they've been doing around the world with the currencies. I'm sorry, currencies, the indices. Let's see what the indices look like. Right there. And as you can see, the S&P 500 was up yesterday, but today it's down again. And we'll just show it to you on the other screen. There's right there. It's like down about 11 or 12 points. Nothing major. The Dow Jones Industrial Average is down over 200 points. So they're feeling the pain there, that's for sure. And then, what do we got here? The NASDAQ 100, again, another product that was up yesterday. Let's see what it's doing today. There it is right there. And you can see it's still almost, it's up. It's still up. Is it up or down? It's up, only down 2 points. That's it. Now there was 3 points, 4 points, 5 points. Yeah, it moves fast. This thing flies. This is like the hot one. There's no doubt about it. This has that, I've mentioned it. This is the Tech 100. It has the top companies on the planet when it comes to technology. So this thing rocks and rolls. It, you know, it does lots of stuff here. But holding up in a daily buy and a weekly buy. Whereas you can see here, the S&P 500 is feeling the opposite effect right now. It's being sold off a little bit in here. It just missed the, did it make it into the buy there yesterday? It looks like it tried to get into the buy. And you can see it's selling it off here today. Not a lot. You can see it's down 11 points. It's not the worst thing in the world. And what you see here basically is 7. So again, right there, let's see, basically what it comes down to is the S&P, and you can see here the Dow Jones Industrial Average right there, feeling the pain again. It's been in that sell, and it tried to lift up, and yesterday it did. You know, we had a good move, and then it still couldn't get into the buy. And now you can see the green and the red today. You know, it's still having that problem, and we slid into the weekly sell last week too. This thing, whereas the other two products, you can see here, the Tech 100 did not. It's still in the weekly buy with no problem there, and the same thing with the S&P 500. It's in the same situation right there. You know, they're not really falling down that much. All right, now from there, we march over into, let's see what they're doing in the Pacific Rim and so forth. Let's see what the Nikkei, we saw it was up pretty good, like 600 points, you know, after the election 2 days ago now. And let's see what they did last night. It was up another 300 points. Yep, up another 300 points there. Right there. up another 300 points. Shanghai, I know for a fact, was down. We'll go look at that before we look at the surrounding countries. Let's see, right there. You see here, pressure on it again. And they have these closed days where they just don't do things, But it's been pressured down and down and down. The stimulus, was at 20. The product was down here when this. Let's see if we can get like 1 month in there. Let's go with 2 months. The stimulus started somewhere around in here. They announced it. It was around the 2,750 area, and it ran up to basically, it was like a 600-point move. And by within days it was down, and they've tried to lift it again, and we're all waiting, because they say they want to help the country, they want to stimulate, they want to do something, but they need to do between 25 and 30 trillion to stimulate the economy in yuan, and so not dollars, yuan. That comes out to basically about $155 billion because the dollar and the yuan are locked together. The People's Bank of China locks the yuan to the dollar. So you're talking about $155 billion per trillion yuan. So 10 of that would be, $1.5 trillion, maybe $3 trillion. Let's see, what am I? There's talk that it needs about between 25 and 30 trillion yuan. So if it was 30 trillion yuan, that would come out to be a little under $5 trillion. I don't think the Chinese have $5 trillion to spend. Matter of fact, I don't think they have the confidence in their economy to want to put it out into the economy. That's the worst part. So that's where we are with the Chinese. Now let's see what Hong Kong is doing, since it seems to be that Hong Kong does seem at times to try to go in the opposite direction of the Chinese government itself. I guess they have some things left over. There it is right there. See, it was up 101 points yesterday. And you can see here, they're not dependent on the stimulation. They've fallen down just the same way the Shanghai has, but it's holding much better. It's holding up in this area here from the sugar high of the People's Bank. And then from there, we'll go over to, I wonder if I just do the back arrow. There it is, there's the back arrow. Let's take a look at the Kospi in South Korea. And that was up also. And you can see over the last 3 months, it looks a lot like the Hong Kong market in that sense. It's been holding steady since the sugar high there. It took off from it too. From there we drift over to Taiwan, right there. And there's the Taiwan market. For somebody that's supposedly going to be attacked by allegedly a major power, which it is, militarily it's a major power. It's got a lot of boats and a lot of guns and bombs and so forth. But Taiwan doesn't seem to be that affected by the posture of the People's Republic of China, or the CCP. They don't seem to really worry about it that much. It was down last night, no doubt about that. So, but it's holding up very well since the sugar high of September. It hasn't given back much. I mean, it just kept on running much more. When this topped out around here, I guess it was with China on the Shanghai, this thing kept on going. So they're not as concerned as you would think they would be. And then from there we drift over to, let's see, where's the Singapore Straight Times? The STI. There it is right there, Singapore Straight Times. Singapore, very firm, very consistent. Uh, you would think that they would have a better idea, since they're probably one of the most capitalist of the societies in the Asian theater itself. And you can see this is the unwind of the $20 trillion pairs trade that Japan had on for years, decades, and now that it's unwound, it seems to, like a lot of the countries over there, their stock indices have taken off from that. They don't seem to be that concerned. So that's been a very positive thing to unwind that. It helped the Japanese market for a while. The Japanese market looked so much better from it all. There's Jakarta, big energy nation, down 28 points, nothing major. Let's look at it over the last 3 months. I mean, you would assume, would be feeling more pain because of the way the cost of oil is. I mean, I think they produce a little more than 3 million barrels a day, maybe 4. So, with oil prices dropping, that has less, they make less money, I guess you could say. Now, when you're an industrial society, an active, good society for growth and all like that, when the oil prices drop, usually a country will go up in value because of it. Because it's a very positive industrial thing. It is. It's a very positive industrial thing. So from there, we'll take a look at the all ordinary index in Australia right there. And you can see that has been doing that same game since the unwind right there of the pairs trade out of Japan. The sugar high has added more to it, and they don't seem to be backing off any. I mean, we had a little weakness here going into last week, but it seems to be higher now. And then let's see where the Nifty 50 is. Is that NES? Let's see if I can find it here before I have to go look it up. Let's see, Nifty 50. Where are you, Nifty 50? All right, let's go find the symbol. The Nifty 50. Must be up higher. And the answer to it is, there it is right there, NESEI, and SEI, all right, there it is right there. That's been down, it's been moving down the last, you can see that the last month it's been pressured down since the beginning of October. Now that they're maybe now that the BRICS, we saw another BRICS story. They were excited. They feel that they accomplished something. They have a banknote now. That's really good. Something to trade would be nice. That's the problem, is that the Chinese have learned that talking is better than doing, and then hoping that people will be fooled and do. And obviously, that's not working out too well right now. We need do things. So in other words, if you're going to stimulate, in other words, they threw $1 trillion of yuan out there, $150 billion, 150, actually to be exact, I believe it was 156 billion total. But it's not really stimulating their market more than just the little sugar high they got from it. Now the question is, as time goes on, will they throw another? In other words, I'd imagine the shorts are kind of leery to short, solely because they could always just throw another $1 trillion yuan at it, another 156 billion, and and then just, you don't know if they're going to do this over a 1 year period or a 3 year period. I mean, the stimulus could literally be over a 5 year period. They do those. Communists have that natural tendency to do that like 5 year plan and 10 year plan. Maybe they're going to do a stimulus for 5 years. So that would be, they could basically, to do the stimulus correctly, they would need to do about 27 trillion yuan total. So you just divide that by 5. That's basically, you want to say at 5 divided by 27, it's basically 6. 5.5 trillion won a year. So they could like wait another month and do another trillion, and then wait another couple of months and do another trillion. I mean, that is the nature of a communist system. They do these 5-year plans and 10-year plans, and so they may have not been explicit because they want to get more bang for the buck. They want people to participate. And that's what they're trying to get, is people to participate. So, all right, from there we drop over to and take a look at. Let's see where Saudi Arabia is this morning. Let's see, where are you, Saud? We can punch it in because we have the beta that has the data there. So we're looking for, right, where's it at? Saudi, right there. So that's the oil company, 2222 SR. So let's see what 222 SR looks like. 2222 SR. That's the Saudi Arabian oil company. See what it's doing there. You see it's pretty much unched with the energies kind of locked down here in a range. Look at this. They barely felt the sell-off that we've had the last couple of days. I mean, it's weaker. Yeah, no doubt about that. It's going like this 1 month. You can see that it was down a little bit, but it didn't take out these lows or that low back in the 8th at 27. Was it 26.90? So yesterday's low was 27 even. Today's low was 26.95. So they're holding it pretty firm in there. Then we go and look at. Let's see. Let's do this again. We have the metal company. National metal manufacturer in Saudi Arabia. Let's see what that looks like. Right there. Kind of more of an industrial thing. You can see it's been relatively firm and steady. Way off its lows of early October. The low was 17.28. We're trading at 18.14. So they're kind of flirting back and forth, but still holding firm. So you can see the couple Saudi Arabian markets that we see. It looks pretty good. From there, let's see, we go back like this. Let's see what Tel Aviv is doing. Rockets Red Glare. I like to call them the Rockets Red Glare. There it is right there, up 5 points for the day. And you can see the last month as it bombs Iran and Lebanon and the Hamas down in Gaza. It's only found ways to go up in value, not down in value. And over a 3-month period, you see the same thing. And notice they got caught in that unwind also, the Japanese unwind of the 20 trillion. It was interesting. A lot of countries, some really good economic countries, seem to have made a great bounce out of that. So the pressure on was very small. And so from there, let's take a look at there's the MSCI Euro. What's the Italian one we've been looking at? Let me see if we can find that, because I like that look going right into the Italian one. Let's see, right there. No, that's not it. That is the Dubai one. Unfortunately, Dubai doesn't do too well. Let's take a look at it on the general platform now. DKUW. DKUW. That's the FTSE Dubai. Yeah, see, it doesn't even give you, like, it just gives you 1 day. I don't understand that. Sad. Year to date, nothing. Just down, that it was down 9 points. I have the Italian one. Let's see if we can find that Italian one. There it is, right there. The FTSE MIB. That's the Italian one. Let's find that. FTSE FTSE MIB. There it is, right there. And you can see there, last month, holding up really well, doing fine there, looking very strong. And the unwind had a little effect, if none, really, I guess. Let's see. Yeah, there it is. There's the unwind right there. See, some of the healthy economic countries, look at 43.76 up today. It's up 0.12%. Let's take a look at the DAX. See what the DAX is doing. See, DAX. Let's see. There it is right there. There's the DAX. DAX looking a little firm here, up 14 points. Looks like they're working it down today. This is the intraday. So it was up much higher. It was up around 19,645. And now it's at 19,545. Still up for the day, but by a thread, you know. And then let's go see. Let's see what the FTSE's doing. Right there. It's down 22 points. And there's the 1 month. Kind of stumbling and bumbling. Yesterday was the lows, but they're pushing it down at the moment. Matter of fact, they took out the highs for like the last 3 days, and then now they've sold it down a little bit because of the action we're seeing in the States here. Let's see what else we have left. I guess that's about it. Do we have anything left? Also, we don't even have a title. Let's do that too. Let's do a title today. And that is, you know, we've been talking about this for a month now, how wrong it was about the interest rate cut. But what else can we say about it? There must be something better to be said in a title. Today's title, I would say more than anything else, is I would assume it's got more to do with the election than it does anything else. Markets are waiting. We have the unemployment number coming out on Friday, which is going to be interesting. The first day of the month. November's this Friday. So, title today is, what should we call today's title? We talked about markets just kind of being stuttery, kind of waiting for China. I think that is to a great extent what's really going on, is that the markets are hoping China will do something, and disappointed in the Fed. So we're going to say markets look for China direction. I think that's really what it comes down to. Everybody's waiting. Let's see, it should be markets wait. I think it's wait. I think that's it. Yeah, markets wait for China direction. Or action. I guess that would be even better. China action. Let's leave it as direction now. Because at this point, they do seem to be just hesitant and just waiting. And it doesn't seem to be stopping any. So, all right, traders, we're out of here. This is Doc from North America. We will catch you all tomorrow, same time, same channel. So, that'll be Happy to Hump Day. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Ta-ta for now.